Good evening and welcome to a very special interview show of the Prode. Britain's inflation rate rose to a 40-year high of 10.1% in July. The annual inflation rate in the United States accelerated to 9.1% in June of 2022, the highest since November of 1981. Not just in the United States and the United Kingdom, but the inflation outlook is almost at an all-time high in other major economies of the world, including India. Joining me today to talk about the global inflation outlook and its impact on India is the former Finance Secretary of India, someone who has also served as the Executive Director of the World Bank and one of India's foremost minds in the field of economy and finance, Shri Subhash Chandra. Thank you so much, sir, for your time and a very warm welcome to the show.
Very good afternoon, Ritwij. How are you?
I'm doing good, sir. So, sir, I would like to begin the discussion by asking that inflation in the United States is at 40-year high. So how do you see this and what is your observation on the same?
See, inflation in the United States, as you noted, it's a 40 years high. But for many years, until 2021, there was virtually no inflation in the United States for more than 30 years. The policy was trying to work inflation. The absence of inflation marked for the last many years rather than the inflation. And in that sense, it's a sudden upsurge. Not only inflation has come, but it's come with a very large vengeance. And that is what characterized today's inflation in the United States. This 8-9% is a very, very high inflation for that. Now that must make everyone sit up and look at what might have caused this inflation, and that I understand is a question. So in my judgment, there are basically three major factors which to my mind are responsible for this inflation upsurge. One, as you are all aware, after the COVID hit the economy and the world, including the United States, one shock took place all over the world, which was the supply shock. So the shipping lines got disturbed, the countries exporting became less amenable to export. The production in many countries went down because of the lockdown and other restrictions. And the United States, which depend to a large extent on importing food and industrial goods, consumption goods, roughly on the order of about $400 to $500 billion a month is their trade deficit. So that's such a large deficit which exists. This is the annual trade deficit. So that kind of large deficit tells you that the United States is dependent upon the outsiders for supplying the goods and service, goods, especially goods for consumption. And when that supply gets disturbed and the quality of goods get reduced, then the prices have to shoot up. Now that's one reason what happened. The second reason was that as it led to initially a lot of unemployment in the United States, there also companies laid off the workers and others. And the government came up with a very large program for unemployment allowances, the COVID kind of support. And the government pumped an enormous amount of money. And the central bank also became the Fed became very, very liberal. Its balance sheet expanded, the availability, the liquidity expanded. So when you have the monetary expansion, even without the supply remaining much unaffected, it leads to inflation. And in this situation in which the supply was enormously disturbed, the inflation was bound to go up very, very high. So that was the second reason. The third one is post the Russian-Ukraine war. Even before that, the oil prices had started going up sharply. And after the war, it just shot up. The petroleum products may make up a large component of their consumption basket, and therefore that added to the inflation. And if I may add one more, which was also true in the context of the United States, for last few years, in the United States, the demand for housing had gone up very sharply. And the housing construction and the demand for that meant that you have to import so many things, and the prices for the construction goods went up. So I think all these four combined created what the kind of inflation you saw in the United States.
Yeah. Now coming to the United Kingdom, so how do you see and analyze the current scenario of inflation in United Kingdom, as it is like the most discussed topic in the Conservative Party leader elections as well?
So what is true of the United States is also true of the United Kingdom by and large. So all these four factors, maybe the housing was not as big a factor there, but the other three were equally relevant for the United Kingdom as well. And there, although I think there was a in the political space to give more concessions, tax relief, etc. Even now, what you see between the two candidates who are sort of vying for replacing Boris Johnson, there is a competition for giving more and more tax concessions. Now, when you leave a lot more income in the hands of people, the consumption goes up and the inflation. So I think even in United Kingdom, in fact, their inflation is somewhat higher. It has crossed 10%. And the disruption caused by the Russian supplies, especially for gas, though it's not that much more of that is for the Europe as such. But when Europe prices of gas goes up, it also goes up elsewhere. So I think those are somewhat different or maybe different. United States is not that much dependent on the gas supplies, but the Europe and United Kingdom is more. So I think they have an equally big problem in their hand as far as inflation is concerned.
Yeah. So coming to India, how big of an impact does the inflation on a global level have on India? And what is your assessment of the current inflation scenario in India? And what are the factors that led to the inflation crisis in our country?
So India, there is slightly different, though there is a good amount of imported inflation in the country. We also import a lot of oil, gas, and other petroleum products. We also started importing a lot of coal for the power generation and all. So import is definitely an element for Indian context also. But in India, there is a large amount of local factors. Our retail index and the wholesale index are behaving in a different fashion. So more often tracked is the retail or the consumer price inflation, which is around 7% now. But the wholesale inflation is much higher at about 15%. So the inflation here, if you look at from the point of the consumer price index, there is an element of the local factors. Because the food makes a very large constituent there in the consumer price index. And if the food grain prices go up, pulses prices go up, or the vegetables face some sort of disruption because of rains or lack of rains or other factors, the index goes up. So you context when the global demand for wheat went up because the Ukraine supplies were off the market, and India wanted to seize the advantage by exporting some 10 million tons of wheat or so. The wheat prices started going up in the country. Now there are reports that rice planting has been much smaller because the inadequate rains in the rice bowl of the country, UP, Bihar, and West Bengal. So, and you're seeing the food grain prices, especially the cereal prices, going up somewhat. So in India, both the factors are relevant to my mind. The global inflation, which comes through the import channel, and the local factors. There was also on the wholesale side, a lot of construction material had gone up because export to meet the global demand, American, Chinese, elsewhere. And the government had to do some imposition of tax on steel and others to sort of cool down the exports of these commodities and the prices here. So in India, I think both the factors are relevant. These are sustaining in my judgment, though the global prices for oil, etc., has come down somewhat, and therefore, but I suspect still we will have inflation stuck in this range of 6% among.
Yeah. Yeah, according to yesterday's RBI report, India's wholesale inflation has eased to 13.93% in July, which is the lowest in 5 months. So how do you see this positive development? And, how positive are you, after seeing this report?
See, sometimes the narratives become so different. When you have inflation 33%, you feel good because it's easing. It is coming down 15% or so. But 13.3% inflation is a very high inflation. And remember another thing. Now, the inflation reading which is coming up on the wholesale side is on a base which was also a double-digit inflation. 12 months back, on wholesale side, you had inflation which was double-digit. So when 13% comes on double-digit inflation of the previous year, then it's not actually reducing much. I don't think I'll feel comfortable until the wholesale price index, inflation goes down to lower 3 to 4 or 5%. It might happen, but until then, I think we will be in a way fooling ourselves that it's those who are impacted by these price, 13% on top of 10% of last year, in a way implies that 20% price increase over 2 years back are the real sufferers. I don't think we should be enjoying. We should be working more towards bringing the prices down.
Yeah, on a global level as well, India, I'm not just in India, but on a global level, the central banks have been increasing the interest rates in order to counter the inflation. So do you think that increasing interest rates is a viable solution to this crisis?
See, the central banks have to increase the interest rates whenever the inflation is high. Whether that has the effect of reducing inflation depends in different or differs in different country contexts. Volcker is famous for having brought down the double-digit inflation in the United States 70s and early 80s by raising the interest rates very high. So the way the interest rate works is that it makes the money demand costlier and thereby reducing the demand of the money in the system. And when the demand for money goes down, the demand for goods and services also go down. And with the demand going down, you have lesser increase in prices or the decrease in prices. That's the way the system should work, right? But that requires the interest rates to be so effective, and there should be absence of other factors. For example, the supply side pressures are not handled by the interest rates. You can't reduce, the food has to be consumed, whatever be the price. People can't reduce the food consumption. They can reduce the industrial goods consumption probably. That would also be making them suffer, but it's not so easy to reduce the essential goods supply, consumption and all. So it works. Likewise, it doesn't have the effect of making, so petrol and diesel, which is a major constituent of the imported inflation. If the supply side shock remains globally and the price of imported stuff remains elevated, even if you rate the interest rates will not affect. But having said so, there is no option but to try this medicine. You have to raise the interest rates, and interest rates are expected to work, maybe sometimes with a lagged effect to do it. But what is the appropriate level of interest rates? How much should you raise or not? Is not so mathematically compatible to the trajectory of inflation. That is more of your, you can try and make it works. If other things also help, it may not. For example, if the rice supplies go down as they have feared, and the wheat supplies don't improve, there's no way the food grain inflation will come down, even if you raise the interest rates.
Yeah. So I would like to conclude the discussion by asking that what, according to you, are some of the urgent steps needed in order to counter both CPI and WPI inflation in India, and what would be your major suggestions to the North Bloc?
See, that's a very comprehensive question, and it has the short-term, medium-term, and the long-term dimensions. Because everything doesn't happen on the half. You can't do it when the iron is so hot. You can't do everything. So you have to take a slew of measures. Let me begin with the short-term kind of thing. So in the short term, food management is the most important from the consumer pricing kind of thing. One measure which the government can and should take is to discontinue the extra 5 kg food grain, which is distributed over and above what is the requirement as per the National Food Security Act, and at a very low price, free of cost. You don't need 10 kg of wheat or food grains to be consumed. You can't consume. So it goes largely as a waste. And to make sure that the overall supplies of wheat and rice don't go down too much, one thing you can do is to discontinue this one. So that's one. And I think we should deal with our imports and exports in a more mature way, even if it means some inflation to continue, because you may reduce it in short term, let us say by imposing export duty on steel. You may bring down the prices, but it will hurt the investments in the steel. It will make it very difficult. And therefore, in the medium and long term, this will hurt. The biggest short-term and medium-term measure to my mind is our biggest dependence is on the oil, edible on the petroleum products, including gas. And this is a long sustaining dependence. The solution are not the reduction in the consumption of energy, but generating electricity or energy by other. We need to get our renewable story very, very correctly. We follow some mistaken beliefs of encouraging Make in India in this in renewables, modules, cells, etc., and which ends up hurting the renewable expansion. So when you are basically dependent on the cell, etc., from elsewhere, I think it makes sense to go whole hog in expanding this, even if it means enormous amount of imports. That would reduce the power, the demand for the edible, for the petroleum products and all. Lastly, to my mind, I think we should deal with our industrial economy a little more carefully. I mentioned about steel, but there are many items which we have now good capacity to do, but we must follow a policy to get into the digital side of it much more, because in future the productivity gains will come more on the digital side. We have to import a lot of semiconductors, a lot of chips and all. If we can get our act together on the semiconductor side and become one country where you can sort of ensure that the electronics export or the electronic import-export imbalance becomes better, I think we will do well. So some of them, these are the short-term measures, but many of them would require a very long-term kind of planning. The inflation episodes keep on coming. It's not a 1 year. There's no guarantee that this will not revisit after 2 years or 3 years for different reasons. And therefore, we must be looking for longer-term solutions.
Yeah. Thank you so much, sir, for your time and for your kind thoughts. Really hope the situation gets better in the world soon. On this note, I want to end this interview. Once again, thank you so much for joining.
Thank you very much, Ritwij. All the best to you.
Thank you so much.